Because without a wheel, a chariot can't be run. And similarly, without hard work and persistent efforts, success can't be attained. And yes, friends, that is what the whole theme is about. Pragati, that is progress and growth.
So, good afternoon, dear guests, future chartered accountants, caffeine-powered scholars, and Excel spreadsheet warriors. Myself, Rakesh Agarwal.
And myself, Kinjal Shah, welcoming you all to the National CA Students Conference 2025, Pragati. Well, Devraj, imagine this stage as the balance sheet of your life. And being an aspiring chartered accountant, your knowledge, power, and discipline are the biggest assets. But what about the liabilities?
अरे किंजल, everything comes at a cost. ये पढ़ाई का स्ट्रेस, ऑफिस की डेडलाइंस और दिन की 7 कप चाय are the biggest liabilities.
But still, what makes it balanced?
A little humor, a lot of unity, and amazing event like national conference where we don't just debit our knowledge, we credit more and more opportunities in our pockets.
Thus, talking about balance sheets, there must be some guiding principles for the formation of the financials, right?
Yes, it's so simple. Accounting standards.
So, you want to say that a single set of guiding principles will apply to every company?
No, when startup enter into the era of big brands, just like caterpillar turns into a butterfly, it has to follow some specific criteria. Then it has to apply some stringent guidelines to maintain transparency and consistency in the industry. And hence, Indian accounting standard comes into the picture.
So, it's just like turning a Maruti 800 into a super BMW car.
Yes. So friends, get ready to switch gears as we deep dive into the roller coaster of concepts where AS meets its big brother Indes with a twist of fun. Because AS is just like a Nokia phone. Simple, sturdy, but limited.
Where Indes is like a smartphone, sleek, globally connected, and super fast. And now, the most awaited moment has arrived. I would like to request Treasurer of WICASA Ahmedabad, Mr. Kuldeep Solanki, to escort our session expert on the dais, who is none other than CA Rakesh Agarwal, sir.
Please give them a huge round of applause.
I would also invite the Secretary of Ahmedabad branch of WIRC of ICAI, CA Samir Chaudhary sir, and Regional Council member of WIRC, CA Fanil Shah sir, to join us on the dais. Please give him a huge round of applause. तालियां रुकनी नहीं चाहिए.
Now, among us, we have three aspiring minds to share their invaluable knowledge with us. So, I would like to request Namrata Jadeja, Managing Committee Member, WICASA Ahmedabad, to escort our paper presenters, Mr. Harkirat Singh, Ms. Vaidehi Thanki, and Mr. Aryan Mewada. So, please give them a huge round of applause.
A man for us since 2007, dedicated his life for students. So I want to invite CA Dr. Fanil Shah for his words of wisdom to us. Let us welcome a passionate educator, dedicated professional, and a selfless philanthropist to share his words. I would like to request CACS Dr. CPA Australia, Fanil Shah sir. Please give him a huge round of applause.
Thank you, friends. Just taking a moment to share something which is very relevant to all of you at this juncture. Just two small things to share with you. Very first is, I just recall, and this is kind of a very touchy moment for me, not because I'm addressing all of you from this conference, but exactly I remember जब मैं राकेश सर को एज अ सेशन चेयरमैन देख रहा हूं, आई कैन जस्ट रिकॉल वो समय 2007 की साल का. आई वॉज अ वेरी इंट्रोवर्ट स्टूडेंट, यानी कि अगर आप मुझे बोलो कि आपको यहां के बोलना है, तो आई वुड बी सिटिंग ऑन द लास्ट कॉर्नर टू स्पीक. एंड वो दिन था जब मैंने पहली बार पेपर प्रेजेंट किया था. आई वॉज सो नर्वस एट दैट पॉइंट ऑफ टाइम. पलक सर जो कल आए थे, उन्होंने मुझे थोड़ा गाइड किया, थोड़ा मोटिवेट किया, थोड़ा पंप अप किया. मैंने पेपर प्रेजेंट किया. एंड आफ्टर दैट सर एज अ सेशन चेयरमैन shared his words of wisdom, and inculcating that, I started my journey, then as a teacher, then as a professor, then in a public life, and today I am here. So the true credit of that goes to none another but Rakesh sir for being there at that point of time and guiding me. So that's why sir is a real mentor, and then mentor to many students of WICASA. I'm not sharing because we are not having that time. And one thing I want to share with you at this point of time is, last week on Tuesday, one 28-year young chartered accountant passed away, and probably it's said that he committed a suicide. And almost in every month, minimum 2 to 3 chartered accountant students are committing suicide because of the stress may be of work or stress may be of studies. With a sincere hand, I would request you all that CA में पास होना जरूरी है. CA is a valuable degree, but remember one thing: your life, your mindset, and your well-being is priceless. In just becoming a CA, don't lose your patience. Try to become the CA. One day you will become a successful person. Thank you all for having a patient hearing. Thank you.
So now, when the stage is all set, we have a personality who is a cost and management accountancy gold medalist with a known figure in the CA community. He is a highly regarded educator specialized in costing, quantitative techniques, and financial management for CA students. He is known for his ability to simplify complex concepts and make them relatable to students' daily lives. Let us appreciate his presence over here, CA Rakesh Agarwal sir. Please give him a huge round of applause. I would like to request CA Samir Chaudhary sir and Fenil sir to please felicitate our session expert, CA Rakesh Agarwal sir. Please give him a huge round of applause, friends.
Now, I would like to request CA Rakesh Agarwal sir and CA Dr. Fenil Shah sir to felicitate our people presenters for the session. So, I would like to request Harkirat Singh to come forward for the felicitation. So, please give them a huge round of applause. तालियों में कमी मत रखिए. I would like to request Ms. Vaidehi Dhanki to come forward for the felicitation. I would like to request Mr. Aryan Mewada to come forward for the felicitation.
Please give them a huge round of applause, friends. So, moving forward, Lord Krishna said, "Parivartan hi sansar ka niyam hai." That means transition is the rule of the world. Difficult, but always fruitful.
And similarly, transition from AS to IndAS is also concerning and challenging. And thus, to enlighten us more about the key differences and challenges in transition from AS to IndAS, I would like to invite Harkirat Singh to please give them a presentation on transition from AS to IndAS. All the best, Harkirat. Now the stage is all yours. Please give them a huge round of applause for Mr. Harkirat Singh Hooda.
Just imagine, guys, you run a company and last year you made a profit of 100 crores. This year, your business grew, but profit fell to 85 crores. Investors are panicked, shareholders are questioning the performance. What's the reason behind this? You increased the revenue, but profit fell drastically. What's the cost behind this? Not your business performance, but your accounting language. So, welcome to the world, the era of Indian accounting standards, where numbers are reimagined and given a global makeover. So, before going further, let's discuss something about the history of the AS and IndAS. In the year 2006-07, the ICAI, our mother institute, sowed the seeds for giving a paper, a research paper on the convergence and adoption of IFRS. Laterly, in the year 2009, our former Prime Minister of India, the biggest economist of the world, and the Finance Minister who bring the economic reforms in India, late Dr. Manmohan Singh, confirmed about the IndAS implementation in the Summit 20 as a national priority. And in the year 2014, our former Finance Minister, Shri Arun Jaitley ji, made it a national priority and urged for the same. And finally, in the year 2015, the roadmap for the implementation of IFRS was launched and implemented for the Indian companies. But wait, I just got a question for you all. Have you ever imagined that why every time when we discuss about the Indian accounting standard, IndAS, we use word converged or convergence? Why? No problem, I am here for the solution of this. First of all, let's get the first one, adoption. Adoption means to accept and adopt, to accept the IFRS as it is, without any changes. And in the second base, convergence or converged, which means we are accepting the IFRS, but with some changes, which is due to make it suitable with our local laws, economic welfare, and etc. And yes, we can definitely say that India adopted IFRS, not directly, but indirectly. And yes, before going further, let's discuss something interesting about IndAS. First thing, law always overrides IndAS. If there is any conflict, any, Indian law will always override IndAS. Second, IndAS is applicable to both standalone and consolidated financial statements. And this is, I know everyone will be knowing, due to consistencies rule. Third, either you are in or you are out. You cannot say that I'll follow only 5 Ind AS or not all. Either you are totally in or you are totally out. Next, there is no comeback or backwards movement. Once you have adopted or converged into Ind AS, you cannot turn back. And yes, last but not the least, the financials which we have prepared, it shall be applicable to the whole group, not to the particular companies. But why this change? Why this convergence? Let's put some light over this. Firstly, why need this? So the first one was global integrations. As we know, before Ind AS, we were having accounting standards at the general gap for Indian companies, which were locally aligned with the local laws. And as after globalizations, we say that investors from outside India were able to invest in India, but were not investing because our institute or our financials were not that much capable so that they can understand the same. So, global integration was the one of the things. Second, improved financial reporting. As Ind AS was not that much flexible and capable to represent or to show the capacities and the standalone statements of the companies. Laterly, investor confidence and investors friendly and transparencies. Like in the disclosures of AS, we were not having that much disclosures, so that and transparency was not there. Everything little disclosures was there. That's why it was not user friendly. Nextly, but not the least, the regulatory push. As we know that in the accounting standards, Indian General Gap, there were not any updation going there for the last previous couples of years. So it was a basic need to get the update in the accounting standards also. Nextly, when we go further, while doing the convergence and the adoption of IFRS, not all the institutions were under the same umbrella. Like there were some which were outwards for this implementation or roadmap. Any guesses? Kaun the wo log? No problem, I am here. The first one was banks, which were out of the Ind AS roadmaps. Second, are IRDAI, insurance company. And third, NBFCs. Any guesses that why these 3 institutions were not in the Ind AS compliance? Anyone from the audience? Students? Anyone? Yes, this was because of their complex transactions and huge transactions being in their institute. This was the main reason why these 3 were out of the Ind AS compliance. Later on, NBFCs were there into the Ind AS compliance in the year 2018. But till now, banks and insurance companies are following the older gap, which is accounting standards. But what's the framework of the Ind AS? कहना क्या चाहते थे भाई? So firstly, I think this is familiar to all the CA final students. And yes, the students who are in the CA Inter or Foundation, I'm pretty sure that in the final you will get this, you will encounter the same topic. But I'll summarize you for this. Firstly, there were 3 phases. First, in 2015, the volunteer phase was there. Then in 2016, the first phase with some conditioning was there, and in 2017, the last phase, where all listed companies and the companies having turnovers more than net worth more than 250 crores were included into this. And later on in 2018, NBFCs was also included in the same. But main thing, the challenges. What were the challenges which was faced by the Indian companies during these transactions? There were a number of hurdles and challenges, but some of them are listed here. First of all, technical and conceptual clarity was missing. As we know, the only technical conceptual qualities was only with the chartered accountants. And this was also the first time transaction, that's why even many chartered accountants, CAs, was not able to get this. Furtherly, the training and expertise. As we know that only CAs were capable for that, no other framework or no other competition was there for the CAs. That's why only training and expertise was missing. Third, tax implementation. As we know, there were differences in the implementation and recognition criteria. That's why there was arising a tax implementation, the difficulties for the Indian companies. Next, industry-specific issues. As we discussed earlier, banks, NBFCs and insurance companies, they were having a huge transaction and complex structure. That's why this was also main problem, as they required a specific standards for them. And last but not least, cost and compliance burdens. As we know, only chartered accountants was only having the expertise for this, and जो कम होते हैं वो चार्ज भी थोड़ा ज़्यादा लेते हैं. क्यों सही बोला ना मैंने? So yes, CAs were charging very high fees for the compliance purpose. So this was some challenges which were faced by the Indian companies during the transactions. And currently we are having some issues right now, also challenges with the CAs. As first there was NACAS, and which was converted into NAFRA. And currently NAFRA is having the rights and the power to investigate chartered accountants and CA firms and also penalize them and also debar them for if find any negligence and fraud into this. So this is the biggest challenge the chartered accountants are failing this year, right? So what's the difference between what was the effect of getting AS to NDS? So let's take an example of a company which is Adani Enterprise. So in this year, when Adani Enterprise got the volunteer adoption in 2015. So in the balance sheet of 15-16, there was difference of 10,000 crores in the P&L structure. Secondly, the change in the balance sheet, we can see that there was not very much disclosures. We can say that in this, the profit was less, but the accounting, the structure of the balance sheet was getting better. As we can see, it was increased from 395 to 14404. So the balance sheet was becoming stronger after adoption of the Indies. This is the equity and liability. You can go through this also. And lastly, I would like to say that next time, when you look into the balance sheet, not just ask what the number are, but think how the number got there. So this is how Index and CA works. So thank you so much. I have Kirit Singh from Ahmedabad signing off. Thank you so much.
Thank you, Arkanat, for this insightful and transitional presentation.
I would like to request CA Rakesh Agarwal sir to please present his feedback.
Thank you, Harikret. It was a great thing, and to some extent I learned from you. I'll also say with my some experience, some add-ons, and also on the feedback on the paper. All this feedback is not having any impact on your scoring. Okay? Now, so while you were speaking, apart from time management and presentation, I was looking at what is the gift you are giving to the audience in terms of checklist, in terms of templates, in terms of linkages to the various data points. Second, I was looking at the simple practicality, and this I'll be looking for all the three speakers, that what is that one or two things that if your employer gives from tomorrow, do this, then how will you do that? And that messaging needs to come out to the audience. Great, it was coming out. You gave it a lot of, including Adani case and other cases. Then, I was also looking at what is the reasons or the key differences that you are coming out, apart from challenges and those kind of stuff. Third, the technical content and the references, and finally, in the age of technology, how best you have used the recent technology to pull out the information. Now let me tell you what came out as really great and what are the additional things I would like to mention on the table for the consumption of all. If I have to go back and from tomorrow complete an assignment where I'm converting an in the accounting standards financial statement to an in the financial statements, I look for two things as a starting point. First, the template and the past data. Templates are of two categories. A, numbers related. So what are the areas where numbers are impacted? So there will be a checklist. And these checklists are already there in public domain. Second, how will I present the financial statements? So there are model financial statements issued by, in the name of illustrative financial statements. I have to just download that, strike through whatever is not applicable to that particular client, and whatever remains there becomes a template. So I have a template and a number crunching. Template ensures completeness of technicals. Number crunching ensures completeness of all possible adjustments. So transitioning from accounting standards to in the AS, what you need? Two things. As a student, ask for the checklist for conversion, ask for the template of presentation. These two if you have, then you have certain controls. Now, the next step is, whatever we do has to be authentic. Authentic means what? In India, we call it linking to the accounting standards, and globally we call it APS 7 level citations. Can you all repeat the word? APS 7. Can you all repeat the word? APS 7 level of writings. In other words, even if you are writing a literature, it is linked to a source. If it is website, then you put it DOI, Digital Object Identifier. If it is what we say technical, then you link into the standard. If it is a checklist, then you link into the thought leadership publications. So that is APS 7 level of writing. The moment you put APS 7 level of writing in any of your papers, the capability of papers increases. So it is, your paper remains for long, and the next persons who come in the office, he develops on the same paper and add to the citations, and wherever there are old citations, these are removed. Having said that, great comprehension in terms of the context. The context is why it is important. You came out very well that, oh, converting from X to Y has a different number. So in other words, impact on MAT, impact on investors, so on and so forth. You came out very well with respect to why the investors, it's a common language across the world, and the more common language we understand, we can speak to the better world and assess on the basis of transparency. And when there is transparency, the uncertainty premium is lesser. And when the uncertainty premium is less for the cost of finance or the cost of equity, your organization stand to gain. All that came out very well. Now coming to the list of differences, you came out as part of your paper, which is published. Example was in the S115, example was 109. The same could have been also communicated, which is communicated in writing, but a snapshot on the screen will better refresh with the audience. So it's very well. Coming down to the practical challenges, there is something called chart of accounts, which is fundamental to the client. Or there is something called code or classifications. A commentary on chart of accounts and its relevance, because the organizations are monitored on the basis of chart of accounts. Talking on that, bringing out more on that would be enabling the chartered accountants, future chartered accountants, to connect the dots. That was also touched out indirectly. So I appreciate that. Coming to Whenever somebody is coming, transitioning from accounting standard to in the AS, there are lots of notes, and notes have references. Typically, as a student, when we link the references, note change, the references remains. So a stress as to wherever we are interlinking the loan, we are using dynamic Excel or Word, where the notes also changes its references on its own. That is a helpful and implementation point for all of us that we work across. In nutshell, INDES is a talent which will enable you to practice globally. So it's not a local skill, it's a global skill. Global skills means you can practice elsewhere, or when you are taking an outsourcing work over here, be it Gift City, within Gift City, you are much more versatile. So that's the first advantage to the students of Chartered Accountant. Second is wherever in whichever part of the globe you go, when you are signing an report as an auditor, it is with reference to framework. Accounting standard as a framework is applicable to India in a generally SME sector, but INDES is applicable literally across the globe. Even if it is not applicable in certain jurisdictions like US, if you know INDES, then there are a lot of publications and checklists available, differences between IFRS and US GAAP. So because you know INDES and IFRS is negligible differences, you can use it as a cross-currency language. That's the added thing we can always come out as a matter of emphasis to new learners, to future chartered accountants, so that they take the subject in the right context for a global exploration. And now we are going globally, third in the world. So that context setting is, the power of that context setting needs to be always brought out. So in nutshell, I'll put it this way. Rather than relying what session chairman says or speaker says, look for APA's 7 level of citations. That needs to be in our muscle memory as a global professional. Whenever we are transitioning something, transition the permanent knowledge, which is in the means of simplified concepts in terms of execution and tasks. That is, in this case, it is checklist of numbers and checklist for presentation. Convey the pain points in terms of implementation. Convey the benefits out of it. I appreciate the way you have written the paper, the way you have come out with the presentation. It was one of the great presentations, and I presently especially like, as a student, you bringing the example of the largest corporate of Ahmedabad, which is one of the leading corporates in the nation, and having the courage to put the numbers as part of reconciliation, which is a matter of great courage from a student perspective, which a journalist will also think twice. A big hand for you. Thank you.
Thank you, sir. Now I would request everyone to please be seated and maintain the decorum, please.
Hello. Just can I have a minute? Friends, यहाँ पे जो भी पेपर प्रेजेंट कर रहे हैं, may it be Harkirat, may it be Vaidehi or may it be Aryan, they all are students like you. आप 3000 लोग हो, उसमें से ज़्यादातर लोग अभी लंच के लिए जा रहे हैं. I'll always say that एक क्लास होता है जो यहाँ बैठता है, and एक मास होता है जो बाहर जाता है. Now you already chosen to be a class, right? By sitting here. So a sincere request to everyone, right, that let them go who want to go. पर आप जब यहाँ बैठे हो तो पूरा एक justice दे हर एक student speaker को. And always I believe in a law of karma. आप जैसा response आज दोगे, भविष्य में उसका compounding interest के साथ response आपको आएगा. तो let's be cooperative, compassionate to all the speakers to encourage and have a sincere, patient hearing to all of you. Thank you.
Well, moving further, you know what? I once opened a company's financials and it said assets on page 1, liabilities on page 12, again assets on page 14. What a scattered mess.
Are you sure it was a report? Sounds more like a horror Netflix thriller.
Honestly, I was just a foot away of calling the income tax department and tell them, ये बैलेंस शीट में कुछ तो गड़बड़ है सर, कुछ तो गड़बड़ जरूर है।
Well, worry not. The next presenter, Miss Vedayi Thanki, is here to crack the case and reveal the real structure behind this all suspense with none other than presentation of financial statement in Ind AS 1. Please give them a huge round of applause.
So, I have one question for everyone. Can anybody tell me what do you recall from A? A for? Nah, A for something else? Well, यही तुम नहीं समझो because औरत का चक्कर है बाबू भैया, औरत का चक्कर है. Now, औरत का चक्कर है या नहीं, that you can ask from your friend, but notes to accounts and disclosures का चक्कर जरूर है. Because जब तक ऑडिटर को हर OCI का ब्रेकअप, हर रिकन्सिलिएशन ऑफ PPE एंड एवरी गोइंग कंसर्न का असेसमेंट नहीं मिल जाता, तब तक ऑडिटर इज गोइंग टू बी लाइक कुछ तो गड़बड़ है दया, कुछ तो गड़बड़ है. एंड दया बीइंग द आर्टिकल इज गोइंग टू बी लाइक आज भी ओवर टाइम करना पड़ेगा, राइट? बट that, my friends, is the chaos which financial statements presentation or Ind AS 1 resolves. Because numbers may not lie, but if not presented well, they might just confuse. And confusion breeds way more of worse outcomes, which I cannot even disclose right now. You all know it. Okay, so I have a very small question. I'm sure a lot of you would like to open your CA firm or your startup or an entrepreneurship. So if I were to give you these two resumes, which one are you likely to pick as an employee for your organization? The right one? Well, unless the left one is of some bhanja or bhanji of yours, which you have to go for, you are going to pick the right one, right? Now, before you ask me कि कहना क्या चाहते हो, I mean, financial statements are like a resume where presentation totally matters. Ind AS 1 lays the foundation for the entire accounting in today's world. Because for every listed company, Ind AS 1 is compulsory, a mandatory compliance. Because of this, it becomes a very reliable source or principle of information, and that's why more than 6,500 companies and almost all Nifty companies are following Ind AS. Even some of the startups, because that's how they can attract that sweet, sweet FDI from the foreign investors. Well, initially इसको काफी सौतेला व्यवहार दिया गया था, but ultimately it was adopted by the year 2019 in India completely. As you can see, as I just said, 55% of the entire market is of listed companies, and every listed company has to follow Ind AS as of today's date. Well, now let's talk about one such pillar of Ind AS, which if you do not follow, the entire financials can come down shaking. It is of going concern. I'm sure everybody has heard about this. But what does it mean? Going concern means that your financials are intact and you have enough cash flow for the next 12 months. That means your company will not go in liquidation for the next 12 months. Which, if you are not certain about, you must disclose in your financials. Because if you do not disclose it, the auditor will disclose, and he won't do that with a smile. Because just like him, jab tak hai cash, tab tak hai hope. Because if you do not follow going concern, even Kalin Bhaiya can't help you, because he has to go by the rule that gaddi pe chahe hum baithe ya auditor, going concern na hone ka assessment tumhe pass karna hi padega. Next up, just like the case of Jet Airways or say Kingfisher, they did not follow going concern and did not disclose in their financials, because of which their planes landed but permanently. And from a going concern, they were a gone concern. And ultimately, they collapsed. Recently, we also have one more such airlines, unfortunately going in the same direction. Next principle, which is my personal favorite, because it relates with all of us CA students. It is the accrual basis. Because, for example, imagine you're studying for 1 year or say 2 to 3 years, and then say you give exams in the month of May. Results come in the month of July, and the entire panic starts to set in the month of August. But all these emotions accrue when you're preparing. Am I right? Exactly. That's how accrual system works. Here, you have to recognize every expense and income, not when it is actually paid off or earned, but when it is actually earned. That is, when you are making the financial statements. This is the true indication of your financials and your entity. And this is how you can make improvised decisions, and every stakeholder can have exactly the right information. Next two principles are like those quiet backbenchers in the end. They make up the part of the financials and are very important, although sometimes people overlook this. Materiality. It means if it can affect your decision making, it is material. So, for example, you have your friends' influence on you, that means that becomes material for you. Consistency is retaining the presentation and classification of every item in the financials, unless you have a basis to change that, a valid basis. This basically means you must stick to your story in the financials. This happened in the case of Zomato, where they changed their delivery charges classification after they released their IPO. But they did that with a proper basis. That's why auditor did not point that out. Whereas in the case of Infosys, they had a whistleblower which they did not disclose in their financials, which broke their materiality. And then, boom, headlines were everywhere in the market. So, now that we've looked what are the pillars of Ind AS, let's look at what are the components of Ind AS. So, when I say financial statements, I'm sure most of you are going to say, balance sheet, profit and loss statement. But there's more to that in Ind AS. We have 7 components here. Balance sheet, statement of profit and loss, statement of changes in equity, statement of cash flows, comparative information, and opening balance sheet. Can you guys guess one very important component? Anybody? Notes, because the entire story lies in the notes to accounts. This tells the real story of the business. Now, I have compiled some of the stakeholders of businesses' point of views here, because trust me, it is not about how you're presenting, because for every stakeholder, the presentation is very different. They watch the financials with a different kind of viewpoint. It's just how our CA paper is. The question is the same, but everybody has different interpretations, and everybody is looking at the question in different manner. For example, if you look at the investor's point of view, he focuses on liquidity, क्या तुम्हारे पास cash enough है, क्या solvency है, क्या तुम्हारा business टिकने भी वाला है या नहीं for the next few months. That's what his focus is. Because अगर तुम ये criteria में नहीं ठीक से बैठ पाए, then you're likely to receive, this is not my expertise, I am out. Next is the CEO's point of view. CEOs are like the dreamers because they want the business to grow exponentially. Just like the title of this conference, Pragati. They want the business to grow and grow exponentially. But if they do not have enough assets or proper allocation of capital, they are most likely to say, not make in India, but wait in India because we don't have enough cash right now. Next up is the CFO's point of view. This is my personal favorite because this is the one who is very straightforward, smart, and to the point, looking for the compliances and the rules. I relate this with Virat Kohli because he is to the point, following the rules, and going to play the cover drive in even the toughest of the matches, just like the recent IPL match. Lastly, the director's point of view. He basically overlooks the everyday matters or the small nitty-gritties, like in the notes to accounts. He is the one who wants every investor to invest, make the balance sheet and profit and loss statement such that every investor, CEO, and CFO is satisfied with the same. Lastly, I would request everybody on the dais and off the dais to please scan this QR code. I have compiled everything which all of you need. Guidance notes, formats, even the capsule references of Ind AS, Because trust me, 10 minutes is a very small time, and Indias is an ocean which cannot be swam through in just 10 or 11 minutes. So I would like everyone to please scan this and help yourself out with this. Lastly, Indias is not just a compliance checklist. It is a very clear, consistent, and honest storyteller, but in accounting language. It is kind of like a LinkedIn profile, where your LinkedIn profile tells what you are, and your financials tells a story of the entity. So let's make our statements not just presented, but also understood. Lastly, I would end by saying, जब life हो out of control and तुमने कर दिया है audit या accounts में जोल, तब auditor क्या करे? Article क्या करेगा? Article ना जाने उसकी stipend का क्या होगा? Full मिलेगी या आधा fry हो जाएगा? कोई ना जाने अपना future क्या होगा? तो accounts बनाओ, audit कराओ और city बचा के बोल भैया all is well, sing along. All is well. All is well. Thank you so much for being an amazing audience. I hope you enjoyed my presentation. Thank you, everyone. Thank you.
Thank you so much, Vaidehi, for this most insightful presentation. Now I request CA Rakesh Agarwal sir to present his views.
First of all, before even hearing Vaidehi, I was thinking that the first speaker has a very wide topic, all the in the S. And the next speaker has, paper presenter has again wide topic, that is ESG. And she, before the session, I pity her that she has a very narrow topic, that is only one in the S1, presentation of finance. So she'll be having a lot of lesser thing to curate for herself. That was my natural thinking before hearing the paper. I'll say the way she came out with the overall comprehension and relevance in a very smaller topic, it was a lot of hard work and self-conceptualization that has gone into the making. For that, effort and courage, I appreciate, must appreciate. It's an example of making a less interesting topic a bit more interesting or much more interesting. Great. Clear cut, these are the great things to do. And one clear thing which is don't, and never do that. Never associate a brand of your technical standards with any name or institutions, because whatever are the failed institutions of yesterday were a great institution yesterday. And if we associate ourselves with those names or brands, there is a risk that I fall with them. So, we again go back to basics. Whatever you write, it should be APS 7 level of citations. If it is Companies Act, we give a standard. We give a section number. If it is accounting standard, we give a link. If it is a thought leadership, we link it. If it is AI, then we give the link of that chat GPT. So we disown the basis on which we are saying that. Having said that, the beauty of it was, in the S presentation gives you a lot of structured information, and you came out very well with respect to the two way of structure. And on the basis of that structure, you can make decision making from the perspective of investor, from the perspective of CFO, from the perspective of CEO, and also the red flags for director's governance. Appreciate. But the technical section part of it, yes, no names. Now coming to the topic as to what are the significant content that is coming out for the presentation of financial statement, those are well understood because those are templatized. And insight into matters of judgment would have been more helpful for the students. Example, what does current and non-current mean, the gray line cases? What does materiality means in terms of presentation? As an example, From that, how are the decision makings affected with respect to the 4 pillars that you have chosen as a component, as a designation? These would have been handful. Looking at the overall subject, looking at the way you are coming out, an important linkages of the revised presentation is directly with XBRL. A quick touch about how the revised presentation, apart from chart of account, which is the back end, which is more to do with implementation, the final presentation goes back into XBRL. That linkage would have been equally helpful. I'll put it this way, that when I was a student of CA final, I would not have done such a great job. Very well done. Thank you.
Thank you, sir. Well, moving forward, you know what, Devraj? Ever seen a company's report and thought, nice profits, but where is the part about saving the planet?
Yes, in many reports, profits were solid, but zero mention of carbon footprints.
इसका मतलब हाथी के दांत खाने के कुछ और दिखाने के कुछ और? We want the full picture now.
So you are telling me a company can plant trees and still be profitable?
Yes, definitely. Welcome to the new era where green is not about making money, but it's also about saving our Mother Earth.
So let's welcome our next paper presenter, Mr. Aryan Mewada, on a topic measuring ESG performance in financial reports, with a huge round of applause. Now the podium is all yours.
Aryan, just a question, आप कहाँ से हो? You are from Ahmedabad itself. तो friends, really thankful to all of you. Second session बहुत बढ़िया रहा. उसका credit आपको भी जाता है because you are too patient. And पता है जिम में ऐसा होता है, हम हमेशा normally 3 sets लगाते हैं. First set में थोड़ी तकलीफ पड़ती है. Second set में we learn more. And third set जो होता है ना जिम का, कोई भी exercise का, वो सबसे effective होता है. तो just we are on now the last paper to my knowledge.
Quite long, right?
बस थोड़ी सी और patience, थोड़ा सा और cooperation, and we all are known as Ahmedabadis for being the best one. So let's prove to Aryan that we are the best and we are here to listen from you. So all the best to you, Aryan. Yeah.
Hello. Hello. Yeah. I can see some faces here, and I know what you're thinking. Another CA student who is talking about financial statements. Boring, right? But I promise you that this presentation won't be like those. And I want you to imagine this. A multinational company who is basking in profits. Balance sheet is squeaky clean, and the board members are all smiles in their annual report photo. And then boom, the headlines drop. Oil spills, employee protests, and whistleblower allegations too. The company's share prices go as down as the revenues were once soared up. And suddenly, those footnotes don't seem to be footnotey anymore. What went wrong? What went wrong was certainly not on the balance sheet, but it was in what it didn't show. Good afternoon to all the respected dignitaries, esteemed guests, and the beautiful audience in front of me today. I am Aryan Mewada, and it's truly a joy to be here, not just to speak, but to share the stage with such talented fellow paper presenters. But before I begin with anything, let me say this. While we all are trained to analyze balance sheet like Sherlock Holmes, oftentimes the real mystery lies in what it doesn't show. What's missing? No note on carbon emission. No disclosure about the toxic workplace culture, the buzzword these days. And certainly no note on the boardroom politics. That's where ESG comes into the picture. And that's exactly what I am here to uncover. So let's dive beyond the balance sheet to discover why ESG is not an optional but a strategic necessity. So first thing first, let's clear the clutter. ESG is not CSR. CSR is like saying we planted trees. But ESG says we reduced our carbon footprint by 20% and here's the data. To put it in another way, CSR is a compliance-based obligation that companies has to follow in India, which is focused on contribution towards the social causes through prescribed activities. While ESG is a set of criteria that is used to measure companies' impact on the world beyond just its financial performance. And so now that we have met ESG, let's meet the three main characters of the story. And these are the three pillars of ESG, which happens to be the full form of the ESG as well. Environmental, social, and governance. Let's talk about the first one, environmental. And this is all about how a company interacts with the planet. This pillar asks, is your company leaving the world better or just busier? How green are your operations? This includes greenhouse gas emissions, carbon neutrality, waste management, and so on. Moving to the second pillar, social, and as the name suggests, this one is about the people. Employees, customers, communities, basically everyone the company touches. This includes employee well-being, diversity and inclusion, health and safety, human rights, and community development. And this pillar asks a very, very important question in today's era, which is, are we treating the people right while doing business? And finally, we have the third pillar, governance, which covers board independence, anti-corruption policies, legal compliance, shareholder rights, and executive pay. We know that investors love profits, right? But nowadays, they are also want to know that how sustainable are those profits. Because here's the thing, financial report shows value, but ESG reports, they show values. And just like we have accounting standards to maintain consistency in financial reporting, we have ESG standards too. Globally, companies use various frameworks to disclose their ESG performance, and I have tried to cover a few of them here. And to begin with, we have GRI, or say Global Reporting Initiative. This reporting framework is used mostly by the Indian companies and all over the globe as well, as it covers the company's impact on environment, economy, and society. Then we have SASB, which are industry-specific disclosures. Then there is ISSB with IFRS S1 and S2 for sustainability and climate-related disclosures. And last up, we have TCFD, which is our climate specialist, as it helps the companies disclose how they manage climate-related risks and opportunities. But that's the global picture. Back home in India, we have SEBI, who has introduced BRSR, Business Responsibility and Sustainability Report. Think of it as our structured way of integrating ESG into the mainstream reporting ecosystem. It is now mandatory for the top 1,000 listed companies in India. BRSR has three key sections, and I'll walk you through them quickly. First up, we have section A, that are general disclosures, which is basically the biodata of the company. It includes CIN, business activities, group company details, CSR applicability, and other such basic details of the company. Then section B, which are management and process disclosures. And this section checks whether the company has the formal ESG policies, board oversight, timelines, review mechanisms, and even the third-party assessments. And now comes the heart of BRSR, which is section C, principle-wise performance disclosures. And why I say this is the heart of ESG, BRSR is because what can I say? Yeah. It evaluates the companies and it measures the company in a way that is covered under the 9 principles of India's national guidelines on responsible business conduct, which includes ethical governance, product sustainability, employee well-being, environmental practices. Well, you get the idea. And each of these principles has essential indicators which are mandatory and leadership indicators which are voluntary for the companies who want to go above and beyond. Having seen what is expected on the paper, let's look at some Indian companies who are actually bringing ESG to life. And take Tata Power, for instance, which is powering future with its target of 80% clean energy by 2030. It is installing EV charging stations, rooftop solars, and rural microgrids. And then there is Infosys, which has been carbon neutral since 2020. Can you imagine, guys? While we all were busy making Dalgona coffee at our homes in lockdown, Infosys made history by becoming one of the first companies to achieve carbon neutrality in 2020 itself. Just casually proving that IT can be an impactful transformation too. And last but not the least, the Mahindra Group, which under its Haryali initiative planted more than 19 million trees across the country. You don't get it, guys. This is not just offsetting carbon, but restoring ecological balance as well. So, I know what you're wondering. Aren't all this ESG talk is great, but who is actually evaluating it, right? Let me tell you, just like we have credit rating agencies for financial performance, we have ESG rating agencies too. And I have lined up some names for you that you should know, which includes CRISIL, MSCI, ICRA, Sustainalytics, and many more. You can simply go on the websites of these agencies and get a list of companies with their ESG scores and compare them. Because, come on, we all know, when the marks are out, everybody just wants to know, kiske kitne marks hai, right? Am I right? Yeah. So, let's talk about the real thing. We have talked about what is ESG, what are the frameworks, which companies are leading, what are ESG scores, but the important part is, bhai isme hamara role kya hai? Where do we as future chartered accountants fit into all of this? Well, let me tell you, as future chartered accountants, we will be bringing much more than the traditional number crunching skills to the table. In the assurance role, we will be verifying accuracy and reliability of ESG disclosures. From compliance perspective, we will be helping the companies navigate ESG regulations and frameworks. And as advisors, we will be helping the company to integrate ESG into their core business strategy. So yes, in this ESG era, we as future chartered accountants will no longer be just the keepers of financial truth, but the architects of credibility and the drivers of change. Because yes, numbers matter, but values matter too. And together, they tell the full story. Thank you so much. You have been a lovely audience, and that's all from my side. Thank you.
Thank you so much, Aryan Mewada, for this Beyond Balance Sheet presentation. Now I request CA Rakesh Agarwal sir, to please give his views and insights on the same.
Excellent comprehension, Aryan. I learned a lot, especially as a student, you coming out with the flow of the concepts, the 4 sources of standards, including Indian standards, touching upon BRSR, the local version, a bit minor touch about assurance, and would have appreciated more if would have covered matter that matters. And that I would like to elaborate. Matter that matters. Now, as a chartered accountant, when you look balance sheet and P&L, what is the main thing that you look? One is profit and the second is net worth. There may be 200 line items, but these two perhaps carry more than 70 to 80% of the weight. So the moment we talk about ESG, first the professional and then the matter that matters. And nothing is complete in ESG unless we touch about greenwashing and assurance. And we need to bring it on the surface and attack the devil in the room. Coming to first, when we look at ESG, the concept is largely starting from planetary boundaries. There are 9 planetary boundaries, out of which 7 has exceeded, and one of the planetary boundary which is alarming is climate change. There are additional 6 planetary boundaries in relation to environment. These includes NPK, these include ozone layer depletions, these include biodiversity, these include afforestation. And one of the main thing is climate change. And when we talk about climate change, anything that we are talking to corporate, it will have an element of net zero. What is my transition? And when we are talking about transition, it means the assets which we are using will not be required or unless it is rehashed or reconfigured. In other words, these are due for impairment testing. Whenever we are looking at net zero transition, the competition may take a more sustainable product, which is only allowed to license to operate, and our products may not be allowed to sell. So that becomes a going concern issue. Whenever we are looking at climate change, there is an element of carbon tax or CBAM when we are exporting the products, which is cross-border adjustment mechanism. So that's the climate change. And these numbers are there in the financial statements and other non-financial statements. In other words, there is a role of chartered accountant to play. Taking a step back, what are the elements in sustainability that are important? And what are the elements which are other part of ESG which were anyway there? So ESG has 3 components. E stands for environment, S stands for social, and G stands for governance. Governance and corporate secretarial, board procedures, terms of reference, monitoring by SEBI is already in place. In relation to E part of it, there are certain additional terms of references which are now being added at corporate level. So a role is there to some extent, not necessarily to a great extent for G part of it. S part being social is in the broader perspective. And when we talk about the S part, social, which is broader perspective, it is much beyond CSR. It is even supporting universities with thought leadership, giving internships, making optimum use of labor with ethical practices and a lot more. Beyond CSR. Coming to the E part, these are 9 planetary boundaries. In terms of application to corporate of those planetary boundaries, I'll touch upon the few of the more important things which are matter that matters. The way in financial statements we have net profit and net worth as a key matter. Here I'll touch matter that matters with respect to E part of it, that is within ESG. The first is net zero. I should be carbon neutral. So by when I'm going to be carbon neutral, that I need to disclose as a target. And then monitor that target. Unless we are net zero by 2050, the temperature of the world will rise beyond 2 degrees Celsius. And once it's beyond 2 degrees Celsius, there is a tipping point that the ice which is there on the mountains will melt. Similarly, the ocean, because of increased temperature, will occupy more mass. So more water with more mass because of increased temperature. And the peripheral cities, there is an impact. Moreover, the areas which are semi-tropical will become dry in times to come, affecting a mass level migration, mass level of habitat change. Imagine when you look at longitude and latitude, and even if it change by 1 degree, it is 400, 500 kilometers away. So if this area, which today receive rainfall and there is green, 400 kilometers away, which is a desert, comes to this place, the entire habitation of man and other species goes for a toss. It becomes non-habitable. It is that part we have to address collectively as climate change. And that is climate change. Similarly, if we just remove water from the ground, which is prohibited, which earlier might be say 5 feet or 6 feet below, and today it is 400 feet below, the surface of the land initially become dry and then it becomes like desert. In other words, people who were staying in villages and doing farming cannot do that, and they have to migrate in poverty, and that becomes a social unrest. And the business ecosystem or traders which were relying on that is no more available to earn a livelihood from that, they also migrate. So it's an entire conversion that happens of the entire ecosystem, and that changes. I give you a live example. You would have heard Amazon rainforest. A typical tree emits 1200 liters of water per day. Yes, 1200 liters water per day. A tree in Amazon forest. And that technically is known as evaporation. I repeat, evaporation. The same content travels thousands of kilometers away, and then it is fed as a rain on other part of the land. Where it rains, there are hydro projects, so there is electricity. And there are entire ecosystem of industry around that. If you cut this forest, he'll not get rain, and the entire other country suffers from it. So it becomes a global issue. So the second element is hydrology, the way the water systems will change on account of climate change. The third element is toxicology. As we speak today, there are 80,000 different kind of material that human has invented, but they don't understand what is the negative impact of it. When oil was discovered, people thought it's a water with a smell, and then when it burned, it was misused. DDT, which was there, initially it was used as pesticides, but it has a harmful effect and many people died. So we use a lot of things like microplastics of today, which has a harmful impact on the planet. So as we use, there are 80,000 material that we use, which technically is known as novel entity. And unless we know the impact of that, the principle of retributional justice means what? Today something is allowed in law, but if it turns out to be harmful, I should have known that it is harmful, and because I did not know, even if I did not know, I will be penalized criminally. That's the principle of retributional justice that is emerging globally, which is a part of ESG concern to be taken off. ESG is not what you do within boundary. It is for the entire value chain, that is upstream and downstream. And the scope 3 emission, which is generally 2 or 3 times more than the internal boundary, is a matter where as to how you influence your value chain. And that's the part of ESG subject. So when you look at BRSR, it talks about coverage of 75% of the suppliers, upstream and downstream, and how you are impacting them as part of value chain. You are also part of either supplier or customer to somebody else. So they will be asking you as to how you are improving the score of ESG. So just to remain in the business, you need to be part of ESG consciousness for you to have a positive roadmap with respect to ESG. Then comes the issue for India is NPK. Everybody in this room is aware of one thing, oil is limited. Yes or no? Are you aware of? Agriculture is limited using NPK. Let me now clarify. And that should not come as a shocker to you, but it is a shocker in most of the forums. India is an agricultural country. For 1 kg of phosphorus used, that is NPK, N stands for nitrogen, P for potassium, K for phosphorus. 1 kg of phosphorus used, you have 130 tons of yield. That is final product in agriculture. If that is not used, it is significantly yes. Phosphorus, the world has reserves of only 250 years. And it is only in 3 countries in South Africa. The moment there is a ban or a capture by a bigger nation of that phosphorus reserves, the agriculturalist which is using NPK will not be having access to NPK, so your entire production falls drastically. Additionally, so that's the first thing is of use, that is scarcity. However, NPK affects your water. A lot of places you see green water, that is bad. It means there is an NPK inside, which can also be on account of urine. It can be also on account of pesticides that are used in the farming. Now, when you use NPK, what happens? It becomes nutrition to the germs and insects which are there in the water, so they strive more. Now, what happens the moment there is NPK, it reduces oxygen from the water. It grows plants inside. The animals eat plants, sustain them, in the process consume oxygen, and the oxygen is taken away. So the plant life and the insect life, that is biodiversity in the entire ocean, is negatively impacted. That's the negative impact of NPK, of using it. And so you have to use it judiciously with a limited viability. Then there is an issue of value chain, which we spoke. CBAM is something that are cross-border taxes. On the basis of product footprint or the embedded carbon within your product, there is a level of tax which when you export your product in EU. That is product footprinting. So what chartered accountant needs to understand? I would like you all to repeat the word LCA. Can you all repeat the word LCA? The full form is life cycle assessment. What does it mean? Say for a trading company, when you are doing stock reconciliation, opening stock plus purchases less sales is equal to closing stock. So for a trading company, stock reconciliation is must. In the field of environmental study, for your client, LCA is must. That is life cycle analysis. What are the inputs, what are the outputs, and how it affects my environment, both in terms of input and output. And unless we know input and output, we can't even understand what ESG is for your core product. So a study of LCA is fundamental for the core products, for the clients that you're dealing with in terms of this thing. The next issue comes biodiversity. And here I was surprised as Sanatani. And we as India needs to take a proud of it. There is a study by more than 40 scientists which we published a paper as to how many species are there on the planet and what is the species extinction rate. Dinosaur extinct we know, but how many species exist and what is the rate of extinction? So as per the study, there are 8.8 million species on the planet, out of which 5.5 million are insects. And the extinction rate should not be more than 10 species per million per annum. But we have exceeded more than 100 species are extinct every year per annum per million. That's based on the study. As per the study, the statistical level of confidence is 8.8 million species, that is 88 lakhs, plus minus 2 million, 2.2 million species are likely to be more or less. This scientific study is done today. When I was looking at our Indian literature, there is a word 84 lakh uni, means 84 lakh species exist. So the current scientific paper compared to what was published hundreds of years back, now statistically ties up. That's the element of biodiversity, Paryavaran, which was already embedded, and now we are respecting it a bit more. That's biodiversity. I would like to mention, whatever we do, there has to be a governance around it after understanding the core issue. And when the terms of reference of stakeholders committees are changed, it is included as part of corporate governance framework, which is monitored and disclosed. So the question arises, what arises for ESG disclosures? It is mainly E part of it, toxicology part of it, impact on clean air, clean water, clean soil part of it, recycling of waste, that is circularity part of it, including extended life, toxicology part of it, and the institutions or the locations that we are living in. For India, it is agriculture, so NPK. Water is scarce, so we'll call it hydrological process. These becomes important. And the items that are important needs to be addressed as part of non-financial disclosures. And when these are addressed as non-financial disclosures, whatever are the metrics that are given around, there is an element of assurance on non-financial information. And that element of non-financial information is something that today's chartered accountants are already signing. You take the financial statements of Tata Steel, you take the annual report of Tata Steel, you take the annual report of Reliance Industries, you take the annual report of TCS, Wipros. They have sustainability information which is signed by chartered accountant. That's ESG. Coming to the risk. Risk can be intentional, that is greenwashing, or it can be negligent or innocence. Intentional can be of three levels. Greenwashing 1.0, which is fraud. Greenwashing 2.0, which is misrepresentation. And greenwashing 3.0, which is running a false narrative. These three, there are symptoms to look at, and there are a lot of global publications which a chartered accountants once read will be in a position to dissect and interpret. Then there is an element of negligence of chartered accountant, which can be, I'll explain with an example. Say a company discloses a carbon price of $30 per ton of emission. And on the one side, on the other side, they say that I produce 10 million metric tons. So if I take 10 million metric tons of production and multiply with 30 rupees as carbon price, the profit becomes a loss, and whatever are the reserves, mining reserves, it becomes net worth negative. So on the one side, we are saying going concern. On the one side, we are saying we are ethically responsible. On the other side, we are deficit. So this inconsistency of financial information with non-financial information of ESG, today when people are sleeping, they will not say anything. 3 years down the line, in hindsight, everybody is expert. And that time, they will point out fingers that you are negligent. So unless we know the subject, we don't practice the subject. So the need is to learn the subject. And to learn the subjects, the frameworks are BRSR, IFRS S1 and S2, CSRD. These are the top 3 frameworks. Additionally, all-time framework has been GHG protocols, including understanding calculation of scope 1, scope 2, scope 3 emission, IPCC's 6th generation. And for that, I wish you all the best.
Thank you so much, sir. Now, I would like to request Ms. Namrata Jadeja, Managing Committee Member of WICASA Ahmedabad, to deliver the vote of thanks.
Hello everyone. First of all, I would like to sincerely thank our session chairman, Sir C.A. Rakesh Agarwal, for gracing this session with his presence and guidance. I also extend my heartfelt thanks to our respected treasurer, WIRC, Fenil sir. Thank you, sir, for dignifying this session with your presence. And all the people presenters, Vaidehi Thanki, Harkirat Singh and Aryan Mivada, for sharing their valuable insights on various aspects of accounting standards. Well, the insights you shared helped us understand the practical significance and evolving nature of standards, exceptionally in the context of IND-AS, which is reshaping the financial reporting landscape in India by bringing it closer to global standards, right? And lastly, I would thank each of you for being here and being such a wonderful audience. Thank you so much.
Photographs are the memories which never get fade. So I will request everyone to please step forward for a group photograph.